Hi Inderes TV followers. Kempower reported its Q1 interim report today and held a Capital Markets Day here in Helsinki. I am interviewing the company's CEO, Tomi Ristimäki. Hi Tomi, it has been an eventful day today for Kempower.
Very interesting day, yeah. I was happy to share some information about the company.
Yes.
Progress.
So if you start from Q1 performance, your growth and profitability exceeded at least market expectations. So how would you describe the quarter by all
I think it exceeded a bit our expectations as well, because the positive profit warning as well, or let's say result warning. And I think it has been really good start for the year, and it's kind of showing also how our production is scaling up. Let's say that it's not so much about the space what we have, it's about the efficiency of the supply chain together with the efficiency of the factory that can actually push production. It's the manufacturing time is a one quite important parameter in the equation.
Yes. So you delivered a lot of charging solutions during Q1, and it seems like the run rate is already above 200 million euros from the Lahti factory. So how much potential do you see for the current floor space, and can you even exceed 300 million from these?
I think the floor space is a maybe wrong measure. I think we also offered now some possibilities maybe to calculate with the other articles, like how many charge points or how much power you can produce. And we have been also now doing our new production lines for these sub modules what we use, like the power modules, control modules. We are making more space in the current factory to moving where we actually expanded in 21. So we're using that space to actually have things removed from the factory, so it's increasing the capacity in a way that we can use the full capacity then for the end product. So every move actually makes, and that was a change we did in 4 months. So it's not that long that you need when you see that the demand is increasing, that you can actually respond with the manufacturing capacity.
Yes. So do you think that the improved manufacturing capacity also could support your sales efforts and drive the order intake?
Yeah, I think the customers like the idea that we have been able to reduce the lead times, and they are actually getting the products in time. And we could see that also with this quite high piling of the backlog, that the customers were worried about the lead time, so they make the orders in time and actually we were before talking about that our backlog is always coming to revenue in 1 to 3 quarters, and maybe we were getting orders last year that had like more than a year's lead times, that they were making sure that they get the production. Now I think this is easing up a bit, that you can show better lead times and better let's say performance from that point of view.
Yes. So in the Capital Markets Day you introduced your strategy and new financial targets, but you also upgraded the market size estimate for DC charging from 4 billion to 14 billion. So what has changed during these 2 years, and what are the main drivers for this?
I think the numbers are kind of the same, but it's how the electric vehicle market is behaving that the time gets shorter. I also checked my first business plan in Kempower, and I think the numbers made sense, but the time has gotten shorter. So it's kind of what we planned. It's just happening faster. You have to skip years in your plans or forecasts, and that's I think is happening. Market is moving faster. And people are realizing, and then the decisions from the public side are also affecting. If you look at how EU has changed their opinions and actually selling that new cars has to be CO2 free, or let's say net zero emission cars by 2035. How you achieve that, that's still an option, but I think the battery electric vehicles has the biggest potential. And I think the big move is also that finally we have electric trucks coming to the market. I've been working in that space and trying to sell electric motors to truck manufacturers before Kempower career, and that was difficult discussions. But also in there you heard the sentence that actually the companies using the trucks would like to have the vehicles. It was just not produced, and I think they are now coming to the market. As we saw also in Capital Markets Day, material a lot of the truck manufacturers, what they are announcing, what kind of investments they are announcing. So it seems to move finally to that direction. So I think the truck market coming earlier has changed the market forecast in the biggest scale.
Yes, so the transition is happening finally, and it's happening fast.
Yeah.
So you upgraded your financial targets, at least when it comes to sales. You now target 750 million euro sales by 2026 to 28. So like medium term and medium term EBIT from 10 to 15%. So how do you feel about these targets, and do you?
I like good targets. Yeah. It's in a way, if you look at the EV market, you could forecast whatever if you don't have the limitations of the world. But this is ambitious target for a manufacturing company, and we want to meet the target. And we also learned a lot of things when we are doing how to scale up things, and the model seems to work, how we do things. So we are more confident on actually looking at that this can be achieved. And of course, the market moving now faster, the bigger numbers. It's a big part of this. This how we calculated it quite a long, and what we think that we can also proudly say that we can meet these quite high goals.
And your profitability target assumes that you keep growing and invest into growth.
Yeah. This is and also it's invest is wrong. We use money for the growth. I think people understand invest. It's only capex, but it's also about people, and also being more, let's say, open with net working capital when you grow, that you are securing the growth with stocks and actually having the funds to do that. That's a big part of that. How to build a growth company.
Yes. Okay, thank you, Tomi, and thank you for this day.
Yeah, thank you.